Hello traders, welcome back to another video on how to trade like a professional. In this video, I will talk about two important areas in SMC, which is what? Breaker block and mitigation block, right? Now before I proceed, this is 70 Profit and I'll be your host, your friend and your tutor. So let's dive right in. Now, in this video, like I said, I will talk about what? Breaker block and mitigation block. As I annotate it here for you guys, this is a breaker block. We have a what? We have a bearish breaker block and we have a what? A bullish breaker block. By my right here, we have a what? Bearish mitigation block and what? A bullish mitigation block. So I will talk about how to use this concept to improve your chart analysis, the psychology behind them, and why they work in the market, right? Now, breaker block and mitigation block are almost the same, as you can see, but their price formation is different, right? Yes, their price formation is different. So, from the concept of polarity, we have been taught that when price breaks through a resistance level, as you can see, price breaks through a resistance level, right? It come back, it retests, then what? Continue to the upside. I hope you are getting me now. Also, when price breaks what? When price breaks through a support level, right? It breaks through a support, then it's going to retest, then what? Continue to the downside. I hope you are getting me now. Now, same concept. The same concept of polarity applies to what? Breaker and mitigation blocks too. The same concept. Understand what I'm saying? The same concept of polarity, right? This breakout and retest applies to what? Applies to breaker block and what? Mitigation blocks too. So, like I said earlier, we have a move, we have a rally to the upside, we have a pullback, then what? We have a what? We have a run of liquidity to the upside. When we have a run of liquidity to the upside, then what? We have a demand zone, a failed demand zone right here. The demand zone failed, then what? It retests. How you are getting me? It retests, then continue to the downside. Right? So in this scenario, market could ignore an order block. As you can see, this is an order block. Market could ignore an order block from supply or demand for many reasons. Right? Market could ignore an order block. Like market ignores this demand zone order block. As you can see, market what? Ignore it, right? It breaks aggressively to the downside. Retest, then continue to what? Continue to the downward momentum. Now, why does this demand zone, why does it fail? It could fail for many reasons, including what? It could be what? Shift in market structure. As we see here, we have a what? We have a shift in market structure, right? It could be because what? Price is being what? Overvalued or undervalued, right? Or it could be that what? Price tapping into higher time frame key levels or what? Areas of interest and the like. You understand? Good. So the same thing applies for what? A bullish breaker block, right? Now, like I said, once the breakout is established, right? We have a breakout right here. It's established, as you can see, market aggressively move to what? To the upward momentum. We move aggressively to the upside. Then we wait for the price to return to the breakout level, right? We wait for the market to what? To return to the breakout level, which is retest to confirm if it's what? If it has actually become a support or resistance level, right? Then what? Move to the upside. So breaker block is only confirmed after a price retest back to the what? To the change of character level. I hope you are getting me now. So a breaker block involves looking for key support or resistance level on chart that may cause a significant change in price direction when the price level is broken, right? Now, like I said, the polarity of breaker block changes after the breakout. That is, demand becomes a supply. As you can see, this is a demand level. market aggressively what? Ignore it. Then what? This demand level becomes what? A supply level for a bearish breaker block. Now for a bullish breaker block, you can see what? Price aggressively what? Price aggressively what? Violate this other block. Once this other block has been violated, this particular place supposed to be a what? A supply level. Now it now turns into a demand because what? Price aggressively violate it, then what? Retest, then continue what? To the what? To the upside. So demand becomes supply and what? Supplies become demand. You understand? Good. Now, when we want to trade a breaker block, what are the steps we need to what? We need to follow, because we need to follow some steps. Now, the first thing you are going to identify is what? You identify your swing high and low, right? You first identify your swing high and low. As you can see, here is my swing low here. We have a swing low and what? Sorry, we have a swing low right here, and we have a what? We have a swing high, right? So you wait for a what? For a pullback and let price what? Break it. As you can see, price break it, closing above the what? Above this previous high. So it is even better if this move is associated with what? With an imbalance. Okay, if it is associated with an imbalance, aggressively move to what? To the upside. So then price breaks what? Price should break price should break and close below the previous low. What is the previous low? Here, right here, we have our previous low. Then what? After breaking it, it creates a what? A lower low. So like I said, when price aggressively break this lower low, right? The setup is high probability if we have what? If we have an what? Imbalance of fair value gap right here. If we have an imbalance of fair value gap right here, and when market retest to come back, you feel it, then what? We continue the what? The downward momentum. I hope you are getting me now. Don't worry guys, in the penultimate time of this video, I'll show you guys real chart example, right? Real chart example. Now, you will ask me that why is price retesting? Why exactly is price retesting? What exactly is a retest? Now, the simple understanding of retest is what? What's this? The simple understanding of price retesting is let me say is manipulation. Because let me explain. Now, buyers who bought from a demand zone, mechanically, this is a demand zone, right? This is a demand zone. You are expected to buy from here, right? Now, buyers who bought from the demand zone would want to cut their losses, right? If you bought here and the market moves aggressively here, you will obviously be taken out of the market, right? Because you will likely place your stop loss below here. Then you'll be taken out of this market, right? Now, the breakout sellers, right? The breakout sellers, the sell stop traders, they have their order triggered right here, right? Now, when the breakout sellers, when their order has been triggered, right, they are expecting the market to sell lower, then there will be a what? Some sort of manipulation. There will be a pullback. The market will pull back, right? Hitting their stop loss or probably taking them out. Then before continuing to what? To the downward momentum. I hope you understand, right? So the psychology behind this is that traders who bought from the demand zone are now trapped after the bearish shift in market structure. You get? So remember, breaker block forms when we have a run of liquidity before a what? A market structure shift. This is what I mean by a run of liquidity. This particular line here, right? We have a run of liquidity, then what? Market structure shift right here when it aggressively broken to the downside. You understand? Good. Now, when you want to trade a breaker block, this particular breaker block, it applies to what? Either you are trading internal or minor structures, right? If you are trading internal or minor structure or external or middle structure, this strategy works perfectly, right? So it is not limited to what external structures alone. You can trade it internal or external structures. And trust me, this is one of the what is one of the seven institutional reference points in SMC, right? So that is that for what? For a breaker block. Now, like I said, the same thing applies for a bullish what? A bullish breaker block. You can see we have a what? Run off liquidity to the downside, then the market what? Aggressively broken what? To the upside, which is what? Market structure shift. Then what? It retest. Then what? Continue to the upside, right? So the key factors you need to note when trading the breaker block is that what? The first one is what? Market structure. You need to what? Identify what? The market direction, right? That's what I mean by market structure. You define the market direction. You define the market direction. You identify what? The supply and demand area, the higher time frame key levels, and what? Liquidity area. You understand? Now the second one is what? The validity of the breaker block, right? How do you know that okay, this breaker block is going to be valid? Now, like I said earlier, breaker block are created by what? By a run of liquidity. We have to there must be a run of liquidity to the what? To the upside for a bearish breaker block, right? There should be a run of liquidity to the upside for a bearish breaker block. Then what? Market should aggressively what? Move to the downside. Remember, where this recent low is taken out, if we have what? A fair value gap or an imbalance, this setup is what? It will be a high probability setup. You understand? So you make sure you confirm the breaker block validity, right? You confirm the breaker block validity, make sure that what? A run of liquidity before the what? Before the market structure shift. So you need to look for sharp move with what? With fair value gap when the market changes structure, right? When the market changes structure, you need to look for a what? A sharp move with fair value gap that creates what? That creates some sort of what? Inefficiency. I hope you get that. So same step, all what I said in what? In breaker block, same step applies to what? When you are trading what? Mitigation block. You understand? Same step. But the only difference, or let me say the major difference between a breaker block and mitigation block is that for a bearish breaker block, right here, for a bearish breaker block, it is associated with what? With a liquidity sweep above the high, as you can see, forming what? A higher high before market now shifts to the downside. I hope you get. Now for a bullish breaker block, it is associated with what? With a liquidity sweep below the lows, forming a lower low. As you can see right here, we have a liquidity sweep below this low before what? Before market structure shift happens. I hope you understand. Now for mitigation block, right? This is a bearish mitigation block, as you can see. A bearish mitigation block fails. This particular one, it fails to sweep liquidity above the previous high. As you can see, we have our previous high right here. This particular guy here, it fails to sweep liquidity above the previous high, failing to create a what? A higher high. That is the major difference between what? Mitigation block and what? A breaker block. Now for a bullish breaker block, for a bullish mitigation block, the what's it called? This guy right here, it fails to sweep liquidity below the previous low. As you can see, we have our previous low right here. This is our previous low. So this guy right here, it fails, right? It fails to sweep liquidity below the previous low. It fails to give us a what? To give us a lower low. Before what? Before breaking this structure. Right? I hope you are getting my point now. Now, this particular place, this particular zone where market aggressively move to the upside, where we have a what? A break of structure here. This part where I circle here, if there is what? There is an imbalance or a fair value gap right here. this trade is a high probability. So you wait for the market to retest, right? You wait for the market to retest, then continue to the upside. I hope you are getting me. So same thing applies to what? Applies to bearish mitigation block. As you can see right here, this guy failed to sweep liquidity to the upside before broken down. Now, this particular place where this guy aggressively broken down, there should be an imbalance or a fair value gap right here. So we wait for the market to retest to fill this fair value gap, then continue to the downside. I hope you can easily differentiate the difference between breaker block and mitigation block. Once again, for a breaker block to be valid, it has to what? There should be a liquidity sweep above the high, as you can see right here. Liquidity sweep above the high before what? Before there is what? Market structure shift right here. So right here, there should be a what? A fair value gap or an imbalance. This is not a must, but if there is, the setup is a high probability, right? So you wait for the market to retest, right, and what? Continue to the downside. The same thing happens for a what? For a bullish breaker block, right? So for bearish, this guy right here, it fails. Mitigation block, it must fail to what? To give us a new high. There must not be runoff liquidity to the upside. I hope you are getting me now. Before what? Before a lower low. So let me show you real chart example of what? Of bearish breaker block. What is happening? What is happening? My network is some kind of slow. So as you can see right here, we have what? We have a break of structure to the upside, right? We have a break of structure to the upside. Then what? The market aggressively moves to the downside. It breaks what? The recent low. We have a bullish break of structure here, and what? We have another what? Bearish break of structure. Now, you see this, you mark your entry zone from what? From this consecutive series of candles, right? You mark your zone from what? Consecutive series of candles, or the last down close candle, right? The last down close candle, just like this. Series of consecutive candles, or what? Oh, my network is poor. My network is poor, guys. My network is poor. So you mark your zone right here. You mark your zone right here. Let me see if I can refresh. My network is so poor. Sorry, guys. Sorry, guys. Sorry, guys. Okay, so what happened to my network today? I've not been experiencing this. Okay, so guys, where are we? Where are we? Where are we? Where are we? Okay, so let me delete this. This is what I'm saying. We have what? We have a break of structure to the upside. Remember, I'm talking about what? Bearish breaker block. I'm showing it for you in real chart example, right? A bearish breaker block, right? We have a break of structure to the upside. Then we have what? Another break of structure to the downside, confirming what? A market structure shift. Now, if you want to place your entry, you place your entry to the what? To the last down close candle right here. I hope you are getting me. To the last down close candle, or a series of what? Consecutive candles. You place your entry right there, then what? You target the what? The swing low. As you can see how the market moves from here, how the market moves aggressively to the downside. Alright? How the market moves to the downside. That is what? That is for what? A bearish breaker block. Now, let me show you a real chart example of what? Of a what? Bullish breaker block. Remember I said what? For a bullish breaker block, there must be a what? Liquidity sweep to the what? To the downside. Now, As you can see here, I hope network doesn't fuck me up today. So as you can see right here, we have a break of structure, another break of structure, then what? The market aggressively moved to the downside. Now the market what? Break structure to the upside, which is what? A market structure shift. That's the first signal of what? Of market structure shift. Then you identify your entry from what? From the series of what? Series of consecutive candles, or what? The last up close candle. Remember, I'm talking about what? I'm talking about bullish breaker block, right? Bullish breaker block. So that's why you when you want to mark your entry zone, you mark your entry zone from what? The last up close candle, right? Or a what? A series of what? Consecutive candle. If the if your entry here is what? Is ranging, you mark your what? Your consecutive series of consecutive candle. Remember, if there is week, you mark the high of the week and the low of the week, right? Never exclude the week. You understand? So you set your target right here. As you can see, market ran up to the upside. I hope you guys are getting what I'm saying, right? Like I said, when we have what? When market aggressively move to the upside, if it is what? Associated with what? Fair value gap or imbalance. As you can see, we have a what? A fair value gap here or an imbalance. Market come and fill it, then what? Move to the upside. Market filled it, move to the upside. I hope you guys are getting me. Now let's talk about what? Mitigation block. Mitigation block. Remember, for a mitigation block to be valid, there should be what? There should be a failed. This guy here must fail to what? To take out this eye, right? So let's check about bearish mitigation block in which chart example. What is wrong with my network? Oh God, what is wrong with my network? Uh, let's see if we can find what a mitigation block. My network is so poor. My network is so poor. Okay, I think we have one here. Yes. Remember, we are talking about bearish mitigation block. We are talking about bearish mitigation block. Now, if you come right here, as you can see, we have a break of structure right here, right? We have a break of structure to the upside, right? Then this guy right here, this particular guy right here, it failed. This is where it failed. This is the fail guy. It fails to take out this eye. I don't know if you get what I'm saying. It fails to take out this eye, right? It fails to take out this eye. Then what? Broke structure to the downside. When it broke structure to the downside, it broke structure to the downside right here. Then you select your entry. Remember, we are talking about bearish, which is what? You mark your entry zone from what? From the last down close candle. If there is a consolidation or ranging, if the candle is consolidating or ranging, sorry about that, guys. Sorry about that. Okay, so I think here we are. So we have a break of structure to the downside, to the upside. Sorry, we have a break of structure to the upside, as you can see right here. And this guy, mechanically, this guy is supposed to what? To give us a new high. But this guy right here, it fails. This guy failed to give us a new high, right? So, and it broke structure to the downside, which confirm what? A bearish mitigation block. So you select your entry from this guy right here, the last down close candle or a series of what? Consecutive candle, as the case may be. there might be a what? A red, green, red, green, red. The colors of the candles are not matter, right? So you select your entry right from here and you enter right here. As you can see, the market moved to the downside. I hope you are getting my point. I hope you are getting my point. So let's move to what? A bullish mitigation block. A bullish mitigation block. Remember, this guy too must fail. We must not have a what? We must not have a run of liquidity to the downside. He must fail to take out the low, right? So let's see. Sorry about my network, guys. Sorry about my network. As you can see right here, this particular guy here, it fails to what? To break structure to the downside. This is a failed break of structure. We have a failed break of structure to the upside. We have a failed break of structure to the downside, right? We have a failed break of structure to the downside. As you can see, then what? It breaks structure to the upside. We confirm what? A bullish breaker block. We confirm what? A bullish breaker block. As you can see in this chart example, we don't have any imbalance or a fair value gap right here, right? If we don't have a fair value gap or imbalance, that doesn't mean we cannot trade it. But remember, if it has a fair value gap, it is what? It is considered what? A high probability. So when taking trade like this, make sure to minimize your risk, right? Minimize your risk. So we have a what? A break of structure to the upside. After we have a break of structure to the upside, then you mark your what? Your entry from what? The last up close candle, right? The last up close candle. Then you draw your entry zone right here. When you draw your entry zone right here, then you enter right here. As you can see, the market moves what? The market moves. The market moves. The market moves to the upside. My network is bad. The market moves to the upside. As you can see how it rallies up right there. Understand? I hope you get this concept, guys. I hope you get this concept. And remember, when you are trading a mitigation block, be very careful with your what? Be very careful with your risk management, right? Careful with the trade and manage your risk properly. Manage your risk properly, because as you can see in this scenario, we have a liquidity right here. The market might come to what? To take out this liquidity before moving to the downside. So in order to avoid that, avoid your risk. Avoid your risk, guy. Avoid your risk. The same thing applies to what? A bullish mitigation block. As you can see, we have a liquidity right here. Market might come to what? To take us out here, right here. The market might come to what? To take this liquidity out before what? Moving to the upside. So be careful, guys. Manage your risk as what? When trading, manage your risk when trading what? This mitigation block, right? So guys, that will be it for this video, and I hope you found this video very informative. Goodbye for now, and I will see you in the next one.